Good afternoon. It's time for the top business stories live from the Sky newsroom. The builder of the Titanic, Harland Wolff, set to collapse into administration, will be live in Belfast in just a moment. New polling shows Kamala Harris consolidating her lead over Donald Trump on economic issues. Plus, the Murdoch family's succession to play out in court in Nevada. A very good afternoon to you. This is Business Live with Wilfred Frost. Well, the iconic Belfast company that built the Titanic, Harland Wolff, is to collapse into administration. The firm said up to 60 redundancies were expected, but not at any of its 4 shipyards. Our island correspondent Stephen Murphy's in Belfast for us at the shipyard this afternoon. Stephen, thanks so much for joining us. First, just give us some of that context that I guess I alluded to there, that the holding company is going into administration, but the shipyards themselves will remain operational?
Yeah, that's right. That's the current information we have at the moment. Harland Wolff, yet another very worrying day for staff here at this very iconic Northern Ireland business. We've stood at these gates many times over the last few years as the company has struggled to resolve its long-term outstanding debts and financing issues. It was rescued out of administration back in 2019, and things were looking up when the company was part of a consortium, an international consortium that won a lucrative Ministry of Defence contract to build 3 Royal Navy support ships, and that contract was worth up to £700 million for Harland Wolff. So things were looking up post the 2019 administration period, but it has always struggled with competition from Asia. It has struggled to find lower interest financing, essentially. And back earlier this summer, we saw the UK government decline to provide it with a £200 million loan guarantee scheme, and the government also declined to provide any kind of direct cash injection as well. So that was a very worrying time. It was not a good omen, and it brought us to today, when after a few days of speculation, the board announced that it now did deem the company to be insolvent. As you say, the administration will apply to the parent, the holding company. The 4 shipyards, the iconic one here behind us, which of course built Titanic, 2 in Scotland and another one in England, are run separately under a separate corporate structure, and the hope is that currently they can continue as a going concern until new ownership can be found.
Stephen, what's been the reaction there in the surrounding area?
It's been worrying and a stressful time. And we were here, as I said, many times over the last few years, and a couple of times in July and August. And when you speak to the people here in East Belfast, where many of the workers still traditionally hail from, it's worrying, it's stressful, and it's uncertainty. And business hates uncertainty. And this is one of the most longest running tales in Northern Ireland manufacturing of uncertainty. And we've seen the unions, GMB and Unite the Union, now call for urgent action to try and find new ownership, to bring some of that uncertainty to an end. And we know that the First Minister and the Deputy First Minister at Stormont are meeting with those unions this afternoon. We hope to speak to some of the union representatives who I can see arriving here shortly, to see if we can get any kind of sense of what was said in that meeting. As for the London government, well, it issued a statement which more or less defended its position of not providing a loan guarantee, saying it was simply too risky to the public exchequer, and pointing out that this current announcement of administration, which hasn't taken effect just yet, doesn't currently affect the employees here at the Belfast yard. But certainly the urgency is now there to try and find new ownership, and we believe Navantia, the Spanish-owned shipbuilders who are the lead contractors on that Royal Navy contract, could be interested. The board here at Harland Wolff have expressed some optimism that some sort of deal with a new purchaser or purchasers could be done by the end of October. But for now, it is uncertainty reigning yet again here at Harland Wolff.
Stephen Murphy, thanks so much. Now, a court battle over the fate of Rupert Murdoch's media empire is getting underway in Nevada. The case will decide who controls the family trust after he dies and which of his children will have major voting rights in his companies. Well, joining me to discuss all this is Robert Thompson, a media professor emeritus at Syracuse University. Thanks so much for joining me on this, Robert. Just break down for us again and remind our viewers what's actually at stake here. This is the trust that controls most of the broader Murdoch's family's shares, but Rupert Murdoch is still alive. So why is there even a court case to be had?
Right, he's still alive and he's still got a large percentage. But the matter is when he passes, how is the power going to be distributed? Currently, the votes are with among four children, which means three of them could outvote the preferred Lachlan, and this is to try to revoke that irrevocable trust and to, in fact, have Lachlan stay in charge and be the voting member of the thing so that there's no risk of those other three taking their born again new ideological possibilities and perhaps changing the way, especially places like Fox News do business.
By the way, we are just hearing he's just arrived at court. I think we've got some pictures of that, which will be floating up as we discuss this, Robert. Well, is this a sign that Rupert Murdoch made a mistake in setting up the rules of this trust initially, or is it a sign, really, that he used to think his children agreed with his points of view, were loyal to him and would follow his wishes, and that's changed?
Well, far be it for me to get into the Baroque manifestations and ways in which these family dynamics and corporate dynamics have worked. I suspect that both of those things may have been in the calculus of how that was originally established and how now it's being contested. The argument is an interesting one. I mean, you could make the argument that Rupert Murdoch, especially with the Fox properties, managed to pull a brilliant sleight of hand by going after a fairly small population of people, but enough to make his news network number one and much more successful than any of the other 24-hour news networks out there. His argument is that if he passes, if his votes go on to people who vote to change the way Fox News and Fox Nation and the rest do business, it's going to actually lose money, which will then not be in the best interest of stockholders and his other heirs and all of the rest of it. I think that is the principal part of the argument here, is that if this company doesn't continue the way to run in the way that I figured out it should run, then all the people who have a vested interest in the company are going to suffer, and therefore we need to protect them by making sure that it does run the way I had planned it to run.
Robert, touch on for us the children that are fighting him here. And am I right in saying that they've already not just made an enormous amount of money, but cashed out an enormous amount of money when the Murdoch family went through a bigger transaction a few years ago, which saw them sell Sky, their stake in Sky, to Comcast, and their movie studio in a massive deal to Disney?
Right. Yes, they are very well cared for. And I think that's part of how what's going on here. For one thing, I think those other kids are beginning to get a sense. First of all, their ideology is not nearly as aligned with Dad's as Lachlan's might be, and some of them, I think, are drifting quite far from that. And I also think they're operating in a society and in places where they don't necessarily like being painted with the pretty broad brush that is Rupert Murdoch and the Fox property. So I think that's part of it as well. But we have to remember that you've got to be, it takes privilege to be able to reject the kinds of fortunes that they're talking about. They have made so much money on the operations that Dad set up that they can afford, in fact, to reject him. It's they're in a really sound financial position to be able to cut themselves off should they decide to do that.
Robert Thompson, thanks so much for joining us. Much appreciated.
Thanks.
Sticking in the United States, but pivoting to the election now, and Kamala Harris has maintained her lead over Donald Trump on the economy, according to a new poll. Data from the FT and Michigan University's Ross School of Business suggests a narrow lead for the Democratic candidate in the first economic-focused poll since last week's TV debate. Let's have a look at some of the numbers. Well, here is a question on who they trust most to handle the economy. Well, 44% say Kamala Harris, compared to 42% for Donald Trump. On the question of who do you trust more to lower costs for things like food, gas, and everyday necessities, 44% Harris, 43% Trump. And on the question, will those looking for work to be better off under Harris or Trump, 44% said Harris, 42% said Trump. Well, joining me to discuss all of this, Professor Eric Gordon from the University of Michigan's Ross School of Business. Thanks so much for joining us on this. The first question is a broader one, stepping back from this latest polling. But is it fair to say that the US economy remains fairly strong, certainly relative to many G7 European economies, and yet the incumbent, which I guess is clearly neither of the two candidates, doesn't get much credit for that?
He gets no credit for it. In fact, he's blamed for a lot of things. And another interesting thing is, although by the kinds of measures you and I and the governments use, the U.S. economy is doing reasonably well, voters don't think so. Over 70% of the voters that we polled say, yeah, it's not doing so hot. It's not doing excellently. It's not even doing good. So you have a big rift between what official numbers show and what people think. And I think that has hurt President Biden's popularity.
So when we look at the numbers I just read out on this poll, that for most of those key economic questions, Harris was ahead of Trump, albeit marginally. Is that a sign that she's able to shake off the fact that she is the vice president of the current administration?
It is somewhat amazing because President Biden enjoyed, perhaps the wrong word there, really dismal ratings. They believe, the voters believe that he was doing a terrible job. And this is far earlier than the gaffes, the public gaffes he made. You know, for 8 or 9 months, they think inflation is terrible, the economy is terrible, that he is doing a terrible job. Some of the worst ratings I've seen, and yet she, vice president, that's her national spotlight, they're not holding that against her.
What about the view in general towards President Trump on the economy, when it's not even seen as a competition against Harris? Did people think he did a good job in his 4 years as president? And what about some of the policies he's announced of late? They're not policies that we've never heard of from him before, but he's doubling down on things like tariffs and trade.
Yeah, people rated him as okay. The terrifying thing if you're president is you get blamed for things that were put into effect years before you got into office, and you get credit for things you didn't do. So people thought that Mr. Trump did a reasonably good job, whether or not the results were related to him. His economic policies, his doubling down, particularly on tariffs, are creating quite a divide. Some of organized labor doesn't like him, but some of them like his tariff policies. Some of them think that his strong tariffs against China will preserve jobs. It's more of the same, but maybe with a stronger dose, and it'll be as divisive as ever.
Professor Gordon, talk to me about the outlook for the US deficit and with it the national debt, because over the last 2 administrations we've seen it increase a lot. Trump was more because of tax cuts, Biden more because of spending increases, but a bit of both, I guess. Are either of the candidates talking about addressing that, or is this going to be a serious issue that the country needs to face a year or 2 into the next administration, whoever's in charge of it?
It's an extremely serious issue. The debt numbers are absolutely astonishing, and the annual deficit numbers don't look much better. Both candidates have done a good job of ignoring it, perhaps because the voters don't seem to be too concerned about it. The voters' number one concern is inflation. They think prices have gone up too quickly and that prices remain too high, and the economy is way ahead of any other issue, including immigration, anything else. Deficit concerns are near the bottom, although they won't be in a few years.
Professor Eric Gordon, thank you so much for joining us.
My pleasure.
Still to come here on Business Live, we'll have a look at how the markets fared this afternoon. The FTSE edging out a very slight gain. We'll be right back.
Play Sky News. From the Sky News Centre at 7.
Now that you're up to date, we can go into a bit more detail.
Things can change incredibly quickly.
Taken by surprise.
Have you ever known a moment like this in British politics before?
Yes.
Cheers.
We'll start with breaking news.
Let's get the latest on the ground.
So, by the end, we'll hopefully all understand what's going on in the world just that little better.
They've pushed the protesters further back here. There's around 200 or 300 still remaining.
I'm Dan Whitehead and I'm Sky News' West of England correspondent.
This van goes onto the streets of Plymouth 7 days a week, 365 days a year.
These facilities at the moment are a lifesaver. It's all we've got.
From fishing communities to bustling cities, we spend every day reporting from across the region, hearing from people who have real stories.
I'll have nowhere to live for about 3 or 4 months.
There are still people inside the properties here.
They're coming from the epicentre of what is now a global health pandemic. We were seeing and speaking to young women who were selling themselves right on the high street. It was desperately sad, and the fact it was happening right in the heart of this community. Before Brexit, these oysters were being exported to the EU, but the trade stopped overnight.
What's your feeling about the future then?
Bleak. Might all be finished, I don't know.
The most significant day of this conflict.
They keep telling us that they want aid.
And this is what's left of it.
Tanks, heavy vehicle. Why only in America?
People want their country to work.
Just want a job in a normal life.
Why are these homes empty?
I want you to be honest with people.
That has happened within minutes.
Sky News, the full story first. Free wherever you get your news.
Our app gives you the very best of Sky News wherever you are. Breaking news, videos and analysis.
Evidence of the crisis.
Podcasts, watching us live.
Live here from Washington.
Wherever you get your podcast.
All in one place. And all at just the touch of a screen. The Sky News app. Get the full story first.
There's always more to the news than a headline. We want to discover, to delve a little deeper, to find out what's really going on. Explanation, analysis, the people at the heart of every story. I'm Neil Patterson, and this is the Sky News Daily Podcast. So, by the end, we'll hopefully all understand what's going on in the world just that little better. Available wherever you get your podcasts.
You want to talk business? Meet me in the On-Board Lounge. Fly Emirates. Fly better. Thank you.
Welcome back to Business Live. Let's check in on how markets finished up the day here in Europe. Well, we did see gains for the Spanish IBEX and for the Italian market as well. Just higher for the IBEX there, whilst the DAX in Germany was down 0.4%. The French market down 0.3%. The FTSE 100 was basically flat, up 6 basis points for a very small gain, and a fairly lackluster session hovering around the flat line on both sides of it during the session. US, a bit more action taking place there. We've got the Nasdaq down a full percent. A couple of hours into trade. That's the Nasdaq 100 down 0.75%. The Dow, though, higher by 1/3 of 1%, and in fact hitting an all-time high during the session. The S&P 500's down 0.25%. And a reminder, it's been a fairly volatile couple of weeks stateside. Last week was the best week of the year so far for the S&P 500, which followed the worst week of the year just before that. A quick touch on currencies. Big story, of course, this week with two major central bank decisions coming from the Federal Reserve on Wednesday, the Bank of England on Thursday. Also actually hearing from the Bank of Japan as well, although they're not expected to change rates. Keeping an eye there on the pound against the US dollar, up a full 0.5% above 132. Once again, also worth commenting on the Japanese yen, which has strengthened to about 140 once again. Again, the broader theme, weaker US dollar, expected to cut interest rates on Wednesday when the Federal Reserve meets. Quick look at oil, bouncing today after a very weak couple of weeks, up 1.2% for Brent. Well, the FTSE 100 insurer Phoenix Group has announced a partnership with Schroders, the global investment manager, to form a new private markets business. Future Growth Capital plans to deploy up to £20 billion over the next decade and aims to promote the objectives of last year's Mansion House reforms. It comes as Phoenix reported today that its half-yearly adjusted profit increased by 15% to £360 million, but the stock did trade lower during the session to the tune of about 3%. Joining us now, Mike Eakins, the Chief Investment Officer at Phoenix Group. Mike, great to have you with us. Thanks for joining us. Let's talk about this partnership, first of all, with Schroders. The aim is to get more people to invest in private markets as opposed to the listed companies on the FTSE 100 and the like that we were just talking about?
Yeah, so we're really excited to have partnered with Schroders to launch a joint venture, Future Growth Capital. Future Growth Capital is a brand new asset management vehicle that will deliver on our promise to the Mansion House Compact. So Future Growth Capital will invest in asset classes like infrastructure, life sciences, social housing, venture capital, and early stage growth. All of these asset classes have a proven track record of delivering incremental returns to our customers, but having a much broader positive impact on the broader society and economy. So we were really delighted to launch this joint venture, Future Growth Capital, with Schroders, a brand new asset management company that's going to be investing in those critical asset classes for the UK.
It's so interesting, both around the Mansion House event under the last government, both from statements from the then Chancellor, the current Chancellor, your bosses, and you just then. It's almost like it's promising that if you invest in private companies, this asset class that admittedly has done well over the last decade or two when the FTSE 100 returns have been lackluster. It's almost like you're promising higher returns if people invest in it.
Well, you only have to look that today in the UK, we invest about 9% of our pension assets in so-called productive assets. And if you contrast that with the average of the top 7 developed market economies, they invest about 23% in so-called productive asset classes. And you can really see that coming through in the investment returns that flows to the most important stakeholder, our customers, 12 million customers, 1 in 5 adults in the UK. And if you look at the period 2011 to 2021, and you look at the returns that were generated for UK customers and savers, and you contrast those with the same customers and savers in economies like Canada and Australia, where they do invest a lot more in these productive assets, the UK consumer was off to the tune of 1.1 to 1.3% per annum. Now, that makes a material impact to the retirement pots that we are helping our customers accrue so that they can have a decent standard of living in retirement, and we can deliver on our purpose to deliver those customers a life of possibilities.
But that's all very well said if you're looking backwards, but there's no caveat to say that past performance doesn't guarantee future performance. It could well be that you're marking the top of the private market, just as you encourage people to throw their money at it.
Look, it's really important that when we consider pension assets, we're investing over the very long term. We're taking investment decisions that are measured in not single-digit number of months or single-digit number of years, but multiple decades. If you're someone in your 20s or 30s now, you're going to be paying into your pension, and that money is going to be invested over several decades. And that can really afford you to take a long-term view. And it's been proven that those productive asset classes like venture capital, early stage growth, when held over the long term, which is what we are doing on behalf of our customers, do produce supernormal returns and will accrue to people's retirement pots.
I mean, I dispute that it's been proven that it will do so again in the future, but it sounds like that's the argument you're going to stick to, but and perhaps we should move on. But we'll see. I guess in 10 years' time, maybe Mike, you and I can discuss that, and we'll see how it's played out. In terms of the broader markets and publicly listed markets, are you expecting big interest rate cuts to come this week from the US Federal Reserve, and how does that alter your thinking about the best way to invest?
Look, so we've got a big week from a macro perspective. We got the Fed on Wednesday and then the MPC on Thursday. And so we do expect the Fed to cut. I mean, the big decision will be, does it go 25 basis points or does it go 50 basis points? We don't expect the MPC to cut in the September meeting, but we do expect further cuts down further in the year. But that monetary policy that the Fed and the MPC are setting, that is important to financial markets. But a lot of that has actually been priced in. We would argue that a much bigger determinant of the performance of financial markets is geopolitics. 2024 is a really material year in terms of the number of people going to the polls. So whilst the decision of the Fed and the MPC is important this week, it's also important to note that a lot of that has been priced in.
Mm-hmm. Mike Eakins, Chief Investment Officer at Phoenix Group, thank you so much for joining us. We're out of time here on Business Live. We'll be back, of course, tomorrow at 11:30 and again at 4:30. The S&P 500 is down just a fraction as we leave you. Up next, it's the News Hour with Mark Austin.